Hi, everybody. Thanks for joining me today. We're going to take a look at one of the most common questions new Social Security beneficiaries ask. Are my Social Security benefits going to be taxable? So, before we get into that, please remember to hit subscribe to my channel if you haven't done so already to keep up with all of my personal finance and investing content. And please check out a message from our sponsor, The Motley Fool, where you could find their best 10 stocks to buy right now by going to the link on the screen. So, there are two parts of all taxes for the most part. There's federal taxes and there are state taxes, and both could apply to your Social Security benefits different. So we'll start with federal taxes, which is kind of the more applicable part of it to most beneficiaries. So on the federal side, the question of are my Social Security benefits taxable? The short answer is maybe. Your Social Security benefits might be taxable depending on how much income you have. To determine your income for Social Security benefit purposes, the IRS uses a number called your provisional income. The formula for provisional income is calculated as your taxable income from things like a job, from things like 401k withdrawals, from traditional IRA withdrawals, things like that. So your taxable income plus your tax exempt interest, which the most common source of that is if you have any municipal bonds or tax exempt bond interest. Not all retirees have that. And then plus half of your Social Security benefit. So, looking at a quick example, here is how you would calculate your provisional income. Let's say that you just claimed Social Security, you haven't tapped into your retirement savings yet, and you make $20,000 this year from a part time job. You don't have any tax exempt interest to worry about, and your Social Security benefit this year would be $22,000. Adding these together, so your taxable income of $20,000 plus no tax exempt interest plus half or $11,000 of your Social Security benefit shows a provisional income of $31,000 for the year. So here's how the Social Security Administration uses this to determine whether or not you have to pay tax on any of your Social Security benefits. For single filers, if you file a single tax return, if your provisional income is under $25,000, all of your Social Security benefits will be 100% tax free. If your provisional income is between $25,000 and $34,000, up to 50% of Social Security benefits can be taxable. If your provisional income is above $34,000, as much as 85% of your Social Security benefit can be taxable. So the thresholds are a little bit higher if you file a joint return with your spouse. But the key point here, if Social Security makes up the majority of your retirement income, your Social Security benefit will likely not be taxable. If you get a lot of income from other sources, such as other retirement income, or you still work full time, chances are at least some of your Social Security benefits will be taxable. So here's an example of how this works. Let's use that previous example of someone who's single who has $31,000 in combined income. So the first $25,000 of combined income, as we saw in that chart, is completely tax free for Social Security purposes. The $20,000 you make from that part time job is still taxable income. As far as Social Security benefits go, only the combined income, or I'm sorry, the provisional income that is over that $25,000 threshold, but less than 34,000 will be considered. In this case, you have $31,000 in provisional income minus $25,000. That leaves $6,000 in provisional income that could be subject to that 50% tax rate or 50% taxable rate. 50% of $6,000 is $3,000. So in this case, $3,000 of your Social Security benefits would be considered taxable income. The remaining $19,000 of your Social Security benefit would be tax exempt. So in this case, only $3,000 of it would be taxable. So are your Social Security benefits taxable? A little bit of them are, but not most of them. On the state side of it, the good news is that only 12 states out of the 50 tax Social Security benefits as of 2022, and many others are actively trying to phase out Social Security benefit taxes. The other good news is that most of these 12 states, which you can see on your screen right now, have more lax tax policies when it comes to Social Security benefits than the federal government. Take Connecticut, for example. In Connecticut, they only impose a Social Security benefit tax on people who make up to over $75,000 annually who file single tax returns, or over $100,000 for joint filers. And even then, 75% of your benefits are exempt from taxation. So it applies more to high earners than the federal government's rule. And the same goes for most of the other 12 states that tax Social Security benefits. And if you don't live in one of the 12 states you saw on your screen, none of your Social Security benefit will be taxable for state income tax purposes. Hopefully you found this video informative. Please leave any comments or questions, and I will do my best to answer them all individually. And please, again, click subscribe if you haven't already. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.